below the radar stocks where you will get significantly higher percentage returns.
Okay. All right. Thank you for that, Vineet. I want to quickly switch focus. GSFC is the one which has seen a solid tumble, 8% down in trade today. Weak set of numbers overall, seeing nearly 90% lower when it comes to your EBITDA number, and that stock taking a bit of a tumble. Now, of course, the profits have also fallen, but we spoke with the management on what's impacted margins in Q4 and outlook going ahead into FY25. Listen in.
Along with the lower, subsidy level versus higher input cost, we also had the Red Sea crisis that delayed the shipment of inputs in the Q4. So the production and sales, everything were affected. But we are hopeful to get back the ground in this current financial year, and 20% growth, volume growth we expect in the fertilizer volume.
Okay, so of course GSFC in focus. Jay, let me come to you with regard to this one on charts. What's the sense like? 8% lower today. What should one do?
Yeah, this was already indicative on the charts. It's been an underperformer for 2024, and we see markets as to how many steps a particular stock takes for a traversal. So, this stock has come down in 5 steps, and quite obviously it's got rejected from 250, which is a significant Fibonacci retracement level. It's got one more lower low due below the Jan 2024 low, but post that, the medium term starts to look better. So it needs to go below the lows clock for 2024. After that, the corrective structure will be complete, and then we can look for medium-term bullishness to resume.
Okay. Vineet, it seems to be a common script for fertilizer companies this quarter. I mean, the subsidy amount going away, the upsides on the pricing being capped, but the raw material prices increasing, that margins have gotten hit across the board. Is it an avoid the pack for the time being, or are there exceptions to that rule?
So I believe that the worst of the quarter in terms of input cost increases due to freight costs are done with. And, I am actually contemplating buying into these stocks at lower levels because, if the Rafah crisis were to resolve, then you will suddenly see a sharp fall in the Red Sea freight rates. And, we've already seen part of the one leg of the geopolitical struggle where the Iranian president was assassinated, in that accident. So I believe that there would be some kind of resolution happening, but, I won't say that everything will play out immediately. It's a wait and watch, but definitely the valuations look lucrative from a long-term point of view, and value buying is emerging out.
Yeah, that's interesting. And I think Vineet makes a telling point because GSFC also mentioned that the margins will inch up. It will not go substantially higher, but it will inch up. And he mentioned the Red Sea crisis and how that had hit the JFM quarter, which is a Jan, Feb, March quarter, very, very badly. It'll be interesting to see how this shapes up. What we'll do is we'll take a quick break. Like we discussed, there are a few high flyers which are taking a bit of a step back to their metals, for example. Is it just a pause, or have they done enough already? Or FMCG is the other one, right, which has done really well today, or relatively well today, because there has been some mention about how the rural pain might be bottoming out. Maybe we'll try and get somebody who tracks FMCG very closely on the side of the break as well. Stay tuned.
Welcome back to India Market Close here on NDTV Profit. Quick check on the Nifty FMCG. That's where we left you before the break. 1.4% higher on the FMCG. Let's pull up the constituents, see what some of those are doing, and far and few in terms of losers, at least today. United Breweries, Colgate, Radico Khaitan. But outside of that, look at what Procter & Gamble and HUL are doing. 2.5% on HUL, 3+% on P&G. Tata Consumer also almost 2.5% higher. So clearly seeing good traction. And for that, to break this down a little bit further, what trend is playing out, what's really keeping the markets really interested in FMCG, I have with us Kaustubh Pavaskar, who's the Deputy VP Research at Sharekhan by BNP Paribas. Welcome, Kaustubh. Good having you here. Quick check. Talk to us about what's playing out, especially of late with regard to FMCG. Of course, rural being the key. But do you expect rural to start to play out in FY25? And if so, how quickly?
Yeah, hi, good afternoon. So if we go through commentary of most of the FMCG company for post the Q4 results, we have most of them have indicated that rural did much better than urban in this quarter. So they have already started seeing green shoots in the rural market. So if we consider last 2 years, rural has been lull. So the base will first come into play, and post if monsoons are good and post election budget, if government provides some kind of incentives to the rural market, I think that should drive the overall consumption in the rural market somewhere from maybe from Q2 of FY 2025. So we should start seeing good pickup in volumes in rural market or demand from Q2 of FY 2025. We have already started seeing rural doing much better than urban for some of the companies, and I think that should continue. The recovery will be slow, but if monsoons are good, there are some kind of incentives in election. I think the recovery should be much faster, maybe from Q2 of FY 2025 or second half of FY 2025.
Okay, I take your point, Kaustubh. And in this market, pockets of value, what do you believe is the best play at this point, both in terms of value and in terms of playing this rural theme?
Yeah, so we have seen there have been underperformers in this space. For example, HUL, Dabur, both these stocks didn't do well for last 1 year, and obvious reason is that the volumes have been very low for these companies because both these companies have 50%, almost 50% of their revenues coming from the rural market. So if we specifically want to play on the rural theme, I think if the recovery is there, if we start seeing recovery in the rural market in terms of volume, and there is a pickup in the volume growth of both these companies, I think these two stocks should do exceptionally well. I think they would be one of the key beneficiaries of the recovery in the rural market. barring that, we have seen companies for last 1 year doing a lot of organic and inorganic initiatives in terms of acquiring companies, bridging their portfolio gaps, adding new products into their portfolio, playing on the premiumization strategy, expanding their distribution reach. So under this theme, we believe that Tata Consumer Products, Godrej Consumer Products, these are two of the stocks which will do definitely well in the coming years, and these are both these are our preferred pick in the FMCG space, along with the rural theme, which we expect to start playing in maybe from Q1 or Q2 of FY 2025.
Okay, thank you so much, Kaustubh, for all of those views. It's good having you and good having that perspective. But Vineet, let me come to you. What's your sense when it comes to rural recovery? I'm sure you have a view as well, both with regard to rural recovery as well as how to play it and valuations.
So I think, two plays which are very interesting in Marico and Godrej Consumer. So they're not only hedged with the Indian markets, but they are significant geographical diversification, which makes it very good plays. And we've seen both of them do extremely well in most of their geographies. About 80% of the geographies are firing. India was a laggard for some time, and that is now, almost 40-50% of their business, which is now coming back in a very strong way. So rural growth back means we will see 2 to 3 years of better growth, because next year or this year also we are seeing a favorable monsoon expectation. And I suspect that, this sector being completely out of favor is going to surprise the market with some very, very stellar returns.
Okay, and when do you expect rural to come back, Vineet?
It's already doing it as we speak.
Okay.
So if you've seen the results of Godrej Consumer and Marico, they are very, very exciting.
Got it. And what should one expect from something like an ITC? It's been largely flat over the last 12 months or thereabouts. Results expected tomorrow. What should one expect?
So I think they'll be in line with the rest of the pack, and this might be a good time to accumulate ITC.
Okay.
Watch out for, therefore, some of these FMCG names in that regard. And whether or not the true blue uptick in rural in a meaningful way comes about, I think time will tell. This quarter, like I think both our experts suggested, some of the companies have been able to show that. Jay, have any of the FMCG names stood out for you as either a trade or a positional trade?
Yeah, if you recall, I think 2 weeks back we had a call on HLL for the short term. But as a sector, the FMCG index has potential to scale fresh 52 highs past 60,000 mark. But I don't think it will be led by HLL or ITC clocking fresh all-time highs. It'll be more like a counter-trend bounce, and the laggards like Dabur, Godrej Consumer, and other names which have been underperforming, Britannia and Nestle, they might push the index to higher levels with HLL contributing to the weights. But fresh 52-week highs are possible for the index coming from the smaller players which have been laggards. So I like the Dabur and Marico this for a trade at this current levels. But it's just a trade, not an investment. I think post 60,000, I'm expecting a major top for the FMCG index.
Okay, so all of those, of course, in focus. FMCG, the top sectoral gainer. But I want to switch focus to some infra names, because yesterday we had a slew of announcements coming through on exchanges suggesting good infra wins. We had GR Infra. They were the lowest bidder for the Pune Ring Road project, worth roughly 2,000 crore, and the Wardha Expressway Road project worth 2,400 crore. So nearly 4,000 odd crore worth of wins just yesterday for that one. HG Infra also, two MSRDC projects worth 4,100 crore. PNC Infra 5,000 crore. Now, it's not yet the 4th of June, Vineet, but we are seeing a slew of wins. We also had Welspun Enterprises come out today. Lowest bidder for construction of multimodal corridor in Maharashtra, 1900 crore project, 3 years execution. Vineet, your sense on some of these companies as well as what one is looking at in terms of valuations, because the sense is that a lot of infra projects will be put out for bidding post the 4th of June if the same government comes back, and therefore you will have that sector specifically in focus.
Yeah, so we are very positive on infrastructure, and there are many drivers to infra, different roadways, water projects, sewage. So I think all these three stocks that you mentioned have got good levers of growth. They've got their order book to sales is also very high. On a SOTP basis, though we don't track them, very finely, but we believe that these order wins are definitely good for them. In line with that, we like Welspun Enterprises as well as IRB Infra. Welspun Enterprises because they have got a reputation of closing projects faster than the stipulated time, and secondly, they are sitting on a lot of a couple of oil discoveries, which once they get notified, will see a substantial bump up in the valuation of these stocks. So if I were to play a stock which I think is having a lot of optionality in that, Welspun Enterprise is definitely the go-to stock. And the other one, as I mentioned, is IRB, which is one of our top picks. Recently there was a deal between the promoter sales happening, where the government of Singapore sold out to Ferrero. And, the internal valuation was about 120, 130 rupees. That was not taking into account some of the arbitration matters that were there for the Bombay Ahmedabad way. So I think IRB Infra is a great stock. And since we have worked in detail on that, we have a lot of conviction around that. And we think the stock can close to double from these levels.
Okay, close to double from these levels. Anything interesting you're picking up on charts? If you can talk to us.
Yeah.
Yeah.
HG Infra is the one go-to one for me. Even given the fact that it's doubled in the last 1 month, it's got massive upside potential from here on too. The momentum is extremely strong. So for people who are already long, that's the place to be. But for fresh longs on the space, you have to wait for a pullback here. It's, as I said, last 1.5 months, 1 month, it's doubled from literally from 900 to 1600. So it needs a little bit of pullback, but post the pullback, it's got further higher highs to come through. But this is the most interesting stock for me in this space.
A lot of stocks flying around, right? I mean, just looking at names which have gained a bit. So there is stocks which are hitting fresh highs or 52-week highs include GE Power, which is up in the session today, hit a 52-week high. There is also stocks which are gaining in the last few minutes of trade and therefore deserve a mention. So one is of course Keynote Financial, which is fine, but there is strength that we're seeing in stocks like Cyber Media and a few others. But anyways, a lot of stocks flying around, and we'll talk about some of these on the other side of the very quick break. We need to slip into one. As we hit the break, hear out Anuj Kathuria, who is president of JK Tower Company, talking about factors aiding the Q4 and the trends in demand.
Three things which I would call out. One is that our efforts on premiumization have continued to give us the results. Premiumization efforts were not only in the passenger car segment, that was definitely one of the major areas, but even on the truck and bus radial tires, the premium products, the XM series, the XF series, the XT series have done extremely well. And that has definitely contributed to the overall EBITDA growth. Because of the increase in the raw material prices, there would be, it would not be as, the situation will be different and there will be challenges. We are sure that with our efforts on the market facing as well as the back end, we should be able to, to a large extent, negate the impact of the raw material.
All right, back with India market close right here on NDTV Profit. PNC is built on the gains, 13.3%. And then there are some insurance names like GIC, which is up about 9.7%. There is strength in New India Assurance. Both of them, I think, coming out of the numbers today. We should pull up those stocks. So I don't know if the market is reading that maybe these stocks could do better in the quarter, but there's some clear uptick and strength out there. Not in PNC, that's not the result, boy. PNC is strong otherwise, but GIC and New India are both of them which have done certainly very well for themselves in the session today. There's also strength, by the way, I must say, in Paytm, Harsh.
Yes.
5% higher.
Yes.
And this is despite a quarter which, on the optically, a lot of viewers would be thinking that why is the stock doing so well when the numbers have looked so shabby on the PAT front?
Yeah, so Niraj, there was a loss of roughly 550 odd crore. Well, stock ballpark here, 550 odd crore loss.
Yeah.
The expectation was that loss would be roughly 450 crore. So ideally, the street ought to be a bit disappointed, if at all, with the numbers. But there was a one-off where they've written off Paytm Payment Bank as an investment in their books. So out of the 210 odd crores, they've pretty much written off the entire investment in Paytm Payment Bank. Mind you, Paytm owns roughly 49% in Paytm Payment Bank. So it's actually an associate company of Paytm, but the entire investment has basically been written off, and that's probably impacted the profit after tax number, not probably, has impacted the profit after tax number, and therefore if adjusted for that one-off, the losses aren't as bad as the street was expecting. That is one. And the other possible rationale that I can pull out of the bag is, and more of a question than a rationale, has it really bottomed? That's a question we can probably pose to Vineet.
Yes.
So Vineet, why don't you help us with that?
Let's give him the tough questions. So whatever we can't figure out at all, Vineet Bolinchkar, we throw it to you.
I would not want to wager on this.
Sorry, Vineet, you don't have an option. You are the guest, so...
so I think that the model is broken. The business model is broken, and very difficult to plow back, the way they have done. So until they do not convince me with a better business plan, it just stays out of my radar.
That's a fair call too. By the way, just before we get to Agam, max numbers on your screen as well. EBITDA at 382 versus 340, that's about a 12% uptick. I don't quite know what the expectations were on this one, but it seems that they've come in largely in line. In fact, that profitability is extremely flattish. But remember, some of these companies who don't necessarily focus, again, only on the bottom line numbers. I think we'll wait for some of the other numbers to come. Okay, we've got the bigger one out here on the screen, Sun Pharma. Flashes on your screen. Let's stick with this for a moment. Agam, just hang on. We'll get to you in a moment from now. But Sun Pharma numbers on your screen. And revenues at 11,983 crores versus the estimates of 12,233 crores. So that's one. Varsha will be miking up any moment to talk about these numbers as well. Net profit at 2,655 versus the estimate of 2,441. So the net profit number looks okay. The revenue numbers are marginally below. I would suspect that margin performance could have been okay for the business to clock, unless there are one-offs, of course. But margin performance may have been okay or better than expected for the bottom line number to look in so strong relative to the, you would call it a flattish top line performance on that base, really. A 200 crore miss on 12,000 crores of revenues isn't quite exactly a very large miss. But yeah, let's wait and watch. This morning. In fact, let's first get the view on the numbers as well. Vineet, and then we'll get to Jay as well, because the stock is a bit all over the place, as it would be when earnings get released. Vineet, we just have these two numbers as of now. We don't quite have the margins as yet, trying to figure it out. But any initial thoughts on these numbers?
I think trifle disappointment out there. Would have expected them to do better. And I expect that the stock will sell off given the headlines.
Yeah, well, margin numbers look possibly, like I said, margin number possibly, Harsh, will look much better than what the polls would have been. But as Vineet said, maybe disappointing on the top line front. I don't know if the stock does come off materially on this one or no. And are there some supports there? And Jay Bala, could you tell us if Sun Pharma, independent of earnings, if the chart suggests anything?
I'm bullish on it. I think the move, the top it saw at about 1640, it looks like an incomplete move. The only doubt is the pullback from 1640 has been a bit shallow, but this happens in a very bullish stock. Most of the times, the price structure pulls back much lower than anticipated. That's the only uncomfortable point for me. But if the stock were to take out 1560 on a closing basis, I think fresh all-time highs are coming for Sun Pharma.
Okay, so Jay believes on the chart, Sun Pharma looks okay. Vineet rightly points out that on the fundamental side, the stocks have just come off a little bit. And Vineet, come in on a stock like, or a business like Sun Pharma or some of the others, right? We know Revlimid has been a key reason why these businesses have done really well. And we know that Revlimid at some point of time in 2026, if I'm not wrong, comes to an end. Market tends to discount stories 6 months, 9 months in advance. Why is it that these businesses should trade at 35, 40 times, wherein Teva, the original guy who put out Revlimid, trades at 7, 8 times?
So that's what I'm saying. The Revlimid is over discounted, and the stock should sell off because of that. Very simply.
Okay, so that's the longer term call as well that Vineet is taking, that maybe, in which case, Vineet, it might not be just a Sun Pharma view. It might be a view extended to maybe a Reddy's as well, maybe to some others as well.
Okay. Those who are banking on Revlimid.
those who are banking on Revlimid. Okay, the margins are at 25.8% versus our estimates of, or the Bloomberg estimates of 26.4. So actually I stand corrected on the margins as well. They've come in slightly lower than what the Bloomberg estimates were. But long story short, it seems to be a quarter which is not either creating dramatic upsides or any material downsides for Sun Pharma, at least on the face of it, as per the current numbers. The question only is, can some of the details, is the devil in the detail for Sun Pharma? Let's wait and watch. For now, just bobbing between the red and the green, ever so marginally. Let's see how this one behaves. So, well, that's the view on Sun Pharma. Anything on the healthcare space, by and large, Vineet Bolinchkar, that you may have coverage on where you like? You don't like some of these generic companies which are banking on Revlimid. What about some of the others?
We like Eris Life Sciences.
Why so?
I think they've got a very differentiated model, and they bought portfolios, they've built value, and they've done very large deals. And we think that this stock can double over the next 3 years.
Okay. Well, that's Eris Life Science. Harsh, I don't know if you picked up something else.
Yeah, there are some one-offs, Niraj, around 101 crore in terms of exceptional items. It's been netted off actually. There are quite a few. And I believe it's a recurring theme because there are intangibles which Sun Pharma tends to write off. Also certain forex gains, losses which appear as part of exceptional items, which is probably impacting the bottom line number. But outside of that, it looks like an okay set, and the stock also reacting in tandem with that, Niraj.
Yeah, 0.5%. Let's wait and watch how this one were to shape up. This is a big newsmaker or the big earnings of the afternoon, but clearly, suffice to say, from the looks of it, no major excitement created by Sun Pharma. Okay, well, that's on Sun. Let's move on and talk about some of the other things as well. In a bit, we'll get in our researchers to talk about BHEL, because that's the other big one of the morning that we have to talk about. But as we speak, something that's picked up pace, if I'm not wrong, is Phenolics Industries. So that should come up on your screen. Macrotech has had some good moves today. So that one is the other one. Okay, maybe Phenolics Cables is the one, which is up about 9% or 9.5%. So that one will come up on your screen. Phenolics Cables, 9.5% higher. Macrotech about 6% higher. There's some strength in solar industries as well in the session today. And Clean Science, about 5% higher too at about 1400. So pretty interesting moves that we're seeing in some of those. Jay, I don't know, did we talk about the insurance companies, the general insurance companies, not the life insurance ones, but GIC, New India, they both look very strong today. And maybe a couple of smaller ones too could be chipping in. Anything on the charts for some of these?
Yeah, both GIC and New India, they have a very similar pattern. They have got a significant corrections from the February highs, and they are trying to reclaim the all-time high. But the pattern looks a bit unconvincing for fresh all-time highs. But there might be 7 to 10% short-term upsides. So I like them as a trading bet with a New India in particular, the stop at about 220.
Okay, well, that's on Sun Pharma, and that's on, some of the insurance firms. And clearly, some of them have done really well for themselves in the session today. So do watch out for the insurance plays as well. By the way, it's not just an afternoon that is marked by gainers and which are doing well, but the clutch of losers. We've spoken about GSFC already. We will speak about BHEL in a point of time. But there is a bit of a pullback that's happening in the commodity names today. So Hindustan Copper is down about 4.5%. Hindalco is down about 1.5%. A couple of others too have come off. Vineet, this whole conversation around how the spends in China, in the US infra, etc., might all lead commodities higher, and it is. Aluminum was up 4% overnight as well. Is there more juice left in some of the non-ferrous metal names? I mean, Hindustan Zinc has been a crazy mover, but there are some others as well out there.
So, what has been happening is that in the mining space, specifically to precious metals and base metals, there has been underinvestment over the long time. And while the current demand supply is in favor of the on the demand side, the reserves are not coming out as fast as you would like to. And today, to get a new mine onboarded, at commercial production, it takes anywhere between 10 to 15 years. So, we are going to be seeing a very long, drawn out bull market in the base metals along with precious metals. And one more thing, adding to the, bullish prospects, is the fact that base metals are also now being seen as a investment bet along with the precious metals. So what we are going to see is some skewed demand on the back of supply, and this is going to lead to the base metals moving higher. I believe that Vedanta and Hindustan Zinc have a very long way to go because our prospects on silver are very, very bullish, and along with that, I think the group has got its act together, and hence we think that these stocks will do really well.
Okay, so keeping our eye out on some of those commodity plays, Vineet definitely seems comfortable with those. But shifting focus on to BHEL stock, taking a bit of a knock in trade today. The stock has been in whipsaw since the last month or so. We've seen 270 and 330 on this counter. But point being, the street also seems, in terms of analysts, also seem to be on the fence on this one. Some, or rather not on the fence, but quite widely divided in that sense on this one. We have Anushi as well as Mihika who are going to tell us both views from a bull case perspective and from a bear case perspective as to what are thoughts that analysts are putting out with regard to BHEL.
Who wants to start first?
I'll go first. I'll start off with a bear case scenario since the stock is not doing well today in trade. Now, again, if you look at BHEL in general, what the street was expecting in terms of the profitability, the revenue, it was not quite there. The margins were down. The revenue remained more or less flat. And even if you have to look again, the earnings miss was on expectations. But even gross margins now, despite Q4 being better in terms of the gross margins over here, 6 years of a straight decline in terms of gross margins that we are looking at, and revenues have remained flat. So this does not paint a good picture. We are seeing some supply chain issues as well.
But you have to see that Q4 gross margins were up 205 basis points on a year-on-year basis. EBITDA margins were down, yes, but this was due to a change in accounting policy. Hence, margins may not be comparable on a year-on-year basis. Furthermore, management has also stated that the company did see supply chain issues and execution delays, but going forward, it expects this to be the bottom and does see a turnaround going ahead.
I'm so glad that you brought up the execution delay point, because my second point is about the order book. Now, order book stands at about 1.3 lakh crore. This is not small. 1.1 lakh crore has been its trajectory since the last 5 years. So, if you take that and take the basic book to bill ratio, that stands about 5 times. But somehow this is not reflecting in the revenue growth that we are looking at. FY24, the revenue more or less remained flat. Even if you take last 5 years in consideration, the revenue has gone down about 5% on a CAGR basis.
I get that, but you can't deny that a 1.3 lakh crore order book is a significant potential for future revenues. Furthermore, in the Q4 call, management did state that the company is targeting a 12 to 15% CAGR in terms of revenue. The management has also stated that the older orders of the NTPC will be executed in FY25 and the company will get cash from these commission projects in the next quarter.
Okay, so you have mentioned about the 12 to 15% of CAGR that we are looking at. But just take this into account. Order book of 1.3 lakh crore this fiscal. 1.3x of a growth over year. Even Kotak believes that such a big jump in the order book. But if you're just taking 12 to 15% of growth, that kind of looks modest. So again, your execution over here remains on a watch out. Why is this still a concern going forward for the business? And this has been the problem in the past as well.
Okay, but the old legacy projects are showing signs of execution pickup and expect completion by FY25. Furthermore, Nuvama has also revised its FY26 EPS estimates higher by 7% given the execution of the low OPM legacy orders.
So low OPM orders, higher order book, NDPC, again, long gestation orders. Now, despite you are seeing that there's some going to be slow orders, which will, be on a better trajectory going forward, but the long gestation orders cannot offset these slow orders going forward. Again, what was a concern for the business was its vendor base. So they have faced challenges with their vendors. So even if they are to improve their vendor trajectory going forward, the concern remains on improving their vendors, getting better at execution, but on the other hand, compromising their margins. So it's again a battle between your profitability, which they're already struggling with, or the execution, again, an area they're already struggling with.
But that could be a short-term picture. You have to look at the long-term picture. Now, the government is planning to add 88 gigawatts of thermal capacity by 2032, due to which that the company is expecting 10 to 12 gigawatts of orders from the government itself. Furthermore, Nuvama has also stated that the total addressable market for the thermal space is at 25 gigawatts over FY 25-26 versus just 9.6 gigawatts in FY 24, which could help the company gain more market share. Furthermore, let's not forget the defense order book outlook and its potential. The sector is not only booming, but it also has a government push, and the company has already submitted certain bids to the army regarding air defense guns, as well as for the marine gas turbines to the navy.
Okay, this I have to agree with you. The defense is very strong. Even the order trajectory you've given remains on a quite strong levels. But again, what is my concern over here is the current order book concentration in the power sector. About 65% of our mix is still in the power sector. So even if you want to take defense and the industry sector in general, there is still a long-term plan for this going forward over here. And let's not forget about the valuations that the company has. Quite expensive, 371 of a PE multiple, which is comparing it with a recent rally, it has over like 280% of a jump in the stock price. Again, the picture is about valuations versus the stock rally that we've already seen.
Yes.
Okay, very interesting views coming in.
Who won?
I guess you should decide that. I wanted to ask you for your views on this one.
Today the bear wins without a shadow of a doubt, no matter how strong the bull view was.
Purely on valuations.
Purely on, yeah. If you look at valuations for a lot of stocks, this might be the case. But yeah, I mean, egregious valuations for BHL really, for all the fanfare that people may have. Choppy EBITDA performance all through and through. Yes, a lot of promise. It's been there for a while. I don't know. I fail to understand what do people see in this 1.05 lakh crore market cap. This is crazy.
Yes. Vineet, your views with regard to this one, because execution seems to be the key here. You believe that execution can happen, and maybe just to add a little bit, do you believe that there is enough pressure from the government in any case, given the power deficits, that we need, or BHEL really needs to ramp up with regard to execution, just from a demand supply kind of to plug those mismatches?
So, I will draw your reference to two pieces of news which took place, one yesterday and one a little while back. Yesterday, Vietnam asked Foxconn to go slow on low-end manufacturing because of the power outages that they're facing. And if you talk about AI-based Google searches, it takes 25 times the power of a normal Google search. So the data centers are going to be the new energy guzzlers, and it is estimated that in the US, the demand for power from the data center and green power is going to equal that of EVs. So we are going to be having shortages not only on transformers, but also on renewable energy eventually. So when you have these kind of shortages come, what do you need? You need, the fossil fuel and that age-old dependable coal-based plants coming up. So to that extent, with India putting up their plants and India becoming the manufacturing center for the globe, I think we are going to see a lot of power situations, crisis come about. And that is when you will appreciate the worth of BHEL and the orders that they are sitting on. Let's talk about the other two businesses which you mentioned, defense and marine turbines. So, most of the turbines that India was getting, gas turbines, we were getting them from Ukraine. And Ukraine has obviously been bombed out of oblivion. And so, as an energy security, if you want to have gas turbines, where do you go out, reach out to? So I think that is a very interesting play that BHEL is doing. So it's a natural extension for them to move from power turbines to gas turbines. And it is estimated that gas turbines could become the kind of like you have base load guarantees, because gas is very, very abundantly available globally. So, on a longer term basis, gas turbines are really, really going to come in vogue. Defense, as you know, if you get an order from the army, and since India is indigenizing everything, and also we are exporting now, I think that it could be a great optionality out there. And as far as the power business is concerned, I obviously spoke to you about. One thing which is an invisible on BHEL, which often tends to be overlooked, is that they have a land bank which is the envy of the world.
Yeah.
So I think keeping all these factors in mind, there will be whipsaws in BHEL, but every dip, any deep hit that comes into the market is a buying opportunity.
That's a long and very valid point, but clearly bullish on BHEL. Vineet, thank you for that. It's election season. My colleague Tamanna got a chance to speak to Ian Bremer from Eurasia Group on what his expectations are from the ongoing elections in India. Here is what he had to say. Listen in.
The assumption as per pollsters, at least before the elections began, is that we're going to have policy continuity, perhaps a third term in all likelihood of the Modi government. The question is, by how much? Now, you need 273 to form a government. Does BJP get more than it did last time on its own? What's the number you guys have?
Eurasia Group is pretty consistent with where Modi and the BJP landed last time around, so it's 305 plus or minus 10 seats. My interest is not in the exact number. My interest is that of all the elections in the world this year, India, the largest democracy that is going to the ballot place, India also one of the countries with the smoothest transition. Right? There's not a lot of uncertainty about the legitimacy of the system. It is seen to be free and fair and transparent. And Modi, who has been in power now for 2 terms, is almost certainly going to be in power for another term on the back of pretty strong economic performance and consistent reform. That is, in the grand scheme of things,
well, of course, catch this conversation a bit later on, but markets closing. Well, Jay, if you are here with us, we'll just take a final thought from you post-market close. Please stay on, but this is how the markets are shutting shop, about 0.4% for the Nifty. We'll do a quick market close, really, not dwell too much on it, but I think the index is ending well, and this should actually please the street, that we are ending with the tick at almost the highest point of the day, and the broader markets also have performed well, so not bad going. So good going really for this, and just get the Nifty 50 top gainers and losers and the Nifty 500 top gainers and losers as Harsh joins me. We won't dwell too much on this, just the close picture to show you what's happened, and Cipla HUL on a bit of a defensive bent, Reliance participating, and let's get the Nifty 500 out here on the top gainers and losers just to show you what's happened, Harsh, and not surprising that some of the infra and insurance names feature in this list.
Oh yes, GIC and New India, but yes, PNC Infra. We've spoken about a whole host of these names, including IRB Infra, where we've got views, and you have Rainbow Medical again. Rainbow Children Hospital down around 5.5%. BHEL we spoke in detail about. So tons of stocks that we've spoken about today, already featuring here.
Most certainly. Jai Bala, before we thank you, and we have very little time, but just if you are there, would you believe the momentum continues for tomorrow?
I think it continues for tomorrow. That's not a big thing. What happens after the elections? That's the big question. It's no brainer as far as tomorrow is concerned. In fact, I had a buy today, sell tomorrow call on Sheffield India, but we couldn't give it because we had other things to cover. And just as an aside, I think copper is set to drop about 10%. So it's just a near-term pullback. but still got higher highs to come through. So caution on metal names.
Caution on metal names, warranted as well. Vineet Bolinchkar, Jay Bala, thanks so much for joining, gentlemen, on this show today. Really appreciate your time. And with that, it's a wrap on this leg of India Market Close from Harsh and me and the team that put this show together. Thanks so much for tuning in.